Yeah, so I think there's good reasons, to be honest, why we fell a bit further below the short-term holder cost basis. Also, to be honest, first of all, with on-chain, it's always approximations, right? Like we try to predict this average purchase price, but there are also just on-chain transfers happening that kind of affect and bring a bit of noise to this indicator. And so, typically in bull markets, we see some periods like below the short-term holder cost basis. That is not new. The if we reject of it, as we see here, you get a bit of a prolonged period, and so we have to wait until. So here we basically reject of the short-term holder cost basis. We try again, we find again resistance, we try again, and we are able to push through. And so that is, which pushes it back into bull territory, and we get the immediate uptrend right after. And so this is how I use the short-term holder cost basis. The reason why we fell below it here is, and I maybe we'll go into the next chart. Well, here we before we do, here is still another version where we see these the colors. So we see really the severe red area, which is like the bear market, and then but during bull markets we also tend to have like short periods of this red colors, like below the short-term holder cost basis, which is visible as well. We saw it here with the severe correction, the China mining ban here in 2021, where we had like a more severe period below the short-term holder cost basis, and here in this consolidation we have seen it as well, and so now we're in a bit of the red zone as well. Now, why are we in the red zone? Well, I blame it on, we went really fast from the 70K zone to the 100K zone, and we kind of skipped a whole phase. So here we look at the supply distribution of Bitcoin. So to explain the chart, all of the supply of Bitcoin, so the 19.7 million Bitcoin that is in circulation, they are spread among these price levels, and so each bucket here is represents a certain price level, and so we go from the all-time high all the way back to zero, and so we see a lot of buyers at this 96K, 97K level, and we had a huge gap here where we just jumped over it from 76K towards that 84K, 85K level. And I've actually updated my followers on this. I was hoping to refill that gap before the inauguration of Trump, but that never happened. And so I informed my followers, okay, it didn't happen with the inauguration. Actually, I expected a bit of an uptrend, and we got a small all-time high, although it was kind of disappointing, as I said before, no strategic Bitcoin reserve. And so we started trending down since a bit. And so we've been filling this gap. And so if we now look at the recent downtrend, so this is just a couple of days difference. This was right before the crash, and so now this gap is narrowing down, and it's kind of filling up. And so some of that of these buyers at this higher level, which was a little bit top heavy here, is now in this zone, and we get a more spread out market. And I think that's a part of the natural correction before the continuation of the next uptrend.
I think this is this is a very interesting way to use data to see where we have a gap of interest or buying pressure into the markets. Because if we change that to technical data, then probably it's comparable to VPVR, which is those volume profiles that you usually see. But the volume profiles are quite oftenly fake. It's not actual real price action that will be taking place at those levels. But if I look at the supply distribution, there are a few questions that pop up, which is, the first one is, do you really, like, if there is a vertical move going up or an expansion of price, are we always seeing such a gap?
No, not always. So, but there is moments in history where we've had a gap and it has been filled. And so typically when you have exponential price movements and price goes up too fast, indeed it can cause this gap. And so the problem with this gap is that basically you skip an entire price level where there's very little resistance or support. And so once you get a bit of a top-heavy market and you start pulling back to this level, there's just little support to sustain that gap, and so you're likely to tend and to fall into the gap. And so there's no guarantees of course whatsoever, but to me it's just a logical assumption that when there's little support to make price to keep price at these higher levels, then for me it's natural that we'll first fill that gap before continuing.
And I mean, the only concern that I have or interest that I have is the fact that the higher price goes, the less supply that will likely be traded to a certain degree. So what we've seen in the past, like 1 to 2 years, is the amount of supply that's on exchanges is decreasing, which is great. People are taking self-custody or institutions are buying up Bitcoin. And the higher that price starts to rally, the more likely we'll be seeing those gaps taking place, as there is probably way more interest than selling pressure taking place, creating those exponential price action. And during that exponential price action, you will likely have bigger gaps being created, through which the volatility will also increase.
Yeah, so if we can actually see how much supply is sitting at these levels, looking at this distribution, right? So here we have 3% or nearly 4% around like this 96, 97K level. And so that is 3% of 19.7 million or so. That I think is like over 500,000 coins. So only these two bars are like, over 1 million Bitcoin, if I calculate correctly. And so there's substantial amount of supply, and then we have like a couple percentage, like 2% bars as well next to it, and so there's around like 2 million Bitcoin sitting in this area, which then is thinking about like active supply, which according to my measurements is around maybe 5 million coins or so, that coins that are actually actively traded. And so that's kind of half of that is sitting in this area here, at least that we can see, maybe slightly more. And so I think it's quite maybe top heavy, and as I said, with little support to sustain that gap. I wouldn't be surprised to fall back even to the 76K level over the next weeks, but we'll have to see. There's no guarantee. Obviously, once we get new all-time highs, and so I divide these buckets. Like if we get a new all-time high, new buckets will be created, right? Because we divide equal buckets, and so obviously when you start, maybe we'll get bigger buckets. Like, if we go to 1 million Bitcoin, to give like a more explanatory example, the buckets maybe instead of being like a couple thousand or like dollars, they become maybe like 10 or even $50,000 buckets. Then obviously, these bars are summed up together, and so you have a bit of support in that. If we look at, for example, the 70 to 80K range, then there's a little bit of support there, right? With considering, for example, these bars here on the right. And so the bigger the bucket are, the more supply falls in that bucket. But I think the view is useful because we can see the further we zoom in, we can see gaps, and likely those gaps are filled over time.
If we use the inverse rule, then is there a thesis to be made that if the markets are rotating and going back up, that the ones that have been the biggest buyers or the biggest spikes on the supply distribution is usually also the level where the most resistance can be found?
Exactly, yeah. And I think so this 96K level, and we actually can see that here in the chart as well. So we have like a relatively big bar here. I think that's around the 1500 level. We used to have a bigger bar around the 3000 level. That kind of faded away over time because obviously supply moves, But we actually, using supply distribution, you can identify also the bear market bottoms. Like if we get like a huge, because if there's, for example, a liquidation event during like a bear market bottom formation, there's a lot of supply moving at that price level, and so you get like a high bar suddenly, and those high bars sustain for quite a long time. So we had one here at around that 1500 level. We used to have one around the 3000 and even the 5000 level, which was the COVID drop. We had a high bar, but over time, obviously, that supply starts to move out that price level again, and sometimes just due to transfers, but obviously also due to selling. And so yeah, that's how it works.
I think you mentioned 1503K, but I think you mentioned the left one is the 15K one when FTX collapsed.
Indeed, sorry, yeah, I'm not looking correctly. Indeed, here
That's
in
fine.
this, this is indeed the 15K. So that is indeed the bottom of the previous bear market, and so you see how substantially this bar is. Good, thanks for correcting me. I was looking at it wrong. But indeed, if you zoom in, I've looked at these charts in the past, but obviously not from the 100K level, but from the 70K level, you get a different view. And then, and even from the previous all-time high, so if you look at from the 20K all-time high, for example, and look at the same view, then you can see really well the 3000 level and the 1500 level as well. There are some of these levels that stick out, and so also that helps in determining whether we're at a bottom, yes or no.
And if we look at there is in my opinion, a controversial topic, which is the 4-year cycle. There are like pros and cons for the fact that we have the 4-year cycle. Until date, we're still having them. And there is enough proof of saying that it will continue to last. But if we look at the 4-year cycle, where are we if we compare this cycle to the previous 2 or 3? During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they're giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin.